Hi, welcome back to the channel where I have 3 stocks which could be good buys going into August. If you enjoy this video, please give the video a thumbs up and subscribe to the channel as it would hugely help out a small channel like mine. Into the stocks now. First one we have is On the Beach, who are a UK based travel retailer specialising in short and medium haul flight and hotel holidays across Europe. As you can imagine, this company's been hit hard by COVID and the lack of travelling, but they are in a good position just now and looking forward, which we'll get into shortly. Market cap of 540 million and the share price is still about 45% off from all-time highs in 2018 and 35% away from the March 2021 highs this year. Revenue has fallen off the face of the earth, but due to how well this company is positioned, they had about 55 million in cash in 2019 with no debt, which is amazing to see. This year is also going to be a struggle generating money, but things are slowly opening back up with forecasts out to 2022 and 2023. This is when the recovery should be in full swing, all going well, which should bring them back to pre-pandemic levels and beyond. The balance sheet is very robust, and although they've been eaten into cash piles a little to keep business running, the fact that they have no debt is a huge bonus for this company, and they shouldn't need to raise any debt for the foreseeable future. Going into 2022 and 2023, they should be able to add to this cash pile and get it back up as travel recovers. Let's have a look at their most recent earnings, which were issued in June. Cash status as of March 2021 was 35 million, and they have access to a 75 million revolving credit facility, keeping them financially agile. They have a low burn rate of about 2 million per month, which should see them out for a long time into the future, but as revenue comes back and travel recovers, this shouldn't be an issue. Looking ahead, they mentioned that if travel doesn't recover over summer, then they will need to sustain the business by burning more cash over the winter period. At the moment, they operate in small to medium haul destinations, but at the bottom you'll see they mention that they plan expanding into long haul destinations, and prior to COVID, all business growth opportunities were exceeding expectations. Price targets from TipRanks over the next 12 months have an average price target of 391 pence, given a 20% increase from current prices. But looking further out, up to 5 years from now, I don't see any reason why this can't get back to all-time highs. The second company is British American Tobacco, a huge company with a 61 billion market cap, low PE ratio and a very juicy almost 8% dividend yield. And I totally respect the fact that people may not want to invest in these type of sin stocks for various reasons, which I totally understand, but the purpose of today's video is purely based on business fundamentals. They're a British multinational company who manufacture and sell cigarettes, tobacco, nicotine, with a heavy investment into smokeless products. The company's been around since 1902, so they have been able to keep innovating as the years roll by. The share price has been decimated since the highs in 2017 due to major clampdowns on cigarettes and tobacco. They generated more than 25 billion in net sales, which is fairly flat year over year, but they have been constantly been able to generate earning per share growth in the single digits, and this could be continuing to be the case forward into the future. The balance sheet does carry some high debt, which currently sits about 38 billion, but they have been cleaning this up recently, and in the next few years they should be following the same course. As with all companies within this industry, they have been forced to innovate and bring new products which can still generate cash flow but better for the end user too. The move from cigarettes to smokeless products is at the forefront of their strategy and is a real growth driver with aims of new category revenue of 5 billion in 2025, as well as the aim of having 50 million consumers of non-combustible products by 2030. These are some of their new products, Vuse, Glow and Velo, which have generated a growth rate of 50% in the first half of 2021, which really highlights the potential here. Half year results looked really strong and had an overall growth rate of 8% and financial growth across all vectors for the company. Cigarette volumes are no doubt going to become redundant eventually and have been decreasing for many years now, but customers who purchase these are very loyal and will continue to do so as prices go up year on year. Outlook for the rest of the year looks good, with expected revenue growth of more than 5% driven by the recovery in emerging markets. Middle single digit earning per share growth is on track, and to reduce debt while maintaining a large dividend, which will be about a 65% payout ratio. Price target of about £34, which would give you a 28% increase from current prices, and that's not even including that juicy 8% dividend yield that you could get, so the total return could be fairly huge. And the last one is another stock I could get a slap in the wrist for here, but I feel it offers a huge opportunity for investors out there. I also did a video recently about BP and Shell, covering more about the latest earnings and dividends, which I'll link in the comments below. You should also check that out if you're thinking about investing in either BP or Shell. BP is still down massively since the 2018 highs, and it even traded lower than the initial COVID sell-off in March 2020, and it sits very close to that price just now. As with the last stock, I totally respect and appreciate that people may not want to invest in oil stocks, which is totally fine. But from the investor's point of view, I think that this company can offer a great return in the next 12 months. Oil in general looks to have peaked in 2018 as we move to a more sustainable future. Oil majors such as BP have been making strides into the renewable market, such as the proposed £10 billion investment into the Scottish offshore wind farms, should that get approved. But we will still need oil for a long time into the future, as so many industries rely upon it. Results have rebounded in 2021 due to the recovery in the price of oil, inflation, and the recovery of the economy. They did cut their dividend in 2020, but have brought it back to about 50% of its 2019 levels. Looking out into the next few years, BP's income should recover and be fairly stable, as well as reducing debt, which at its highest in 2019 was £55 million and is planning on being down to £40 million by the end of this year. Price target for the next 12 months is £3.70, giving a 20% increase from current prices, as well as you'll be getting a nice dividend on top of that. As I mentioned about oil stocks, here's a quick screenshot of the outlook for Shell, as they just released their earnings last week. BP's earnings is on the 3rd of August. Shell raised their dividend and completed share buyback, so if BP can follow suit, this could be a great year for them. That concludes this month's video and the stock picks, and I'll see you in the next one.